programs this year. My guest is Kunle Amida, who is the partner Deals Advisory, Price Waterhouse, Nigeria. Mr. Amida, good to have you and welcome to the program.
Hi, good morning. Thanks for having me.
Good morning, Mr. Amida. Can I see Mr. Amida, please? Okay. Mr. Amida, good to have you on the show again. Now let's get started. Let me ask this question. From this your report of 2024, what is the difference between your 2023 report and your 2024 report?
Yeah, thank you. Thank you very much. And good morning. Thanks for having me. 2023 was a very difficult year for Nigerians generally. And I think we need to start by acknowledging that it was a year where there were so many activities, decisions taken by the new administration that significantly impacted the disposable income of Nigerians. The FX reform took place. We had the removal of subsidy. We had significant changes in the parastatals across the country. And when you combine all of that with the devaluation that we had with the Naira, I think in putting this report together, we try to articulate the key 7 important factors that will really define 2024. And the first is around the fiscal reforms that needs to take place. Second, I think we spoke about the need for us to have a significant increase in productivity and the importance that the CBN, the central bank, and the monetary authorities need to place on finding the right instruments and frameworks to ensure that the monetary policy outcomes that we expect they are achieved. And also, I think we touched on the fact that as Nigerians, we believe, given the experience of 2023, we will be able to somewhat adjust better to the situation of things in 2024. But overall, the summary of the report is that we, as a country, the citizens needs to do their bit. The government needs to get things right because the margin that we have for error is quite slim, given the experiences that we faced as Nigerians. And I heard on the show we mentioned earlier around how the purchasing power of Nigerians has really been impacted, and very importantly for all of us, we really need to pay attention to the trends that were articulated in this very insightful reports published by our PwC.
Okay, I'll come back to a bit of what you said in terms of what was interesting for me while you were talking is that the citizens should do their part. And I'm wondering what you mean by the citizens should do their part. Let me allow you to explain that, because for me, I know that I'm doing my part, like I mentioned earlier. I know that I'm doing my part and I'm doing my best, you know, personally and even job-wise, as it were. Personally, I know that I've had to tighten my belt. I know that, I don't do frivolous spending. I know, you know what I'm talking about. Professionally, I'm always here in the morning, doing my bits, trying to keep Nigerians up to speed with what's happening in finance, economy, everything. The other side, so I know that I'm doing my best. And I know this for many Nigerians too, many. Some are not also doing their best. Some are just lazy and complaining, hoping that manna will fall from heaven. So what do you really mean by citizens should do their best? Because we've been doing our best since
Okay.
how many years on earth now that I know that I'm now an adult fending for myself.
Okay, so thank you very much. So the point is, a very important, given the nature of our economy, we are import dependent. And there are a lot of things in this country, they are driven by the FX situation. As we speak today, before May, the official rate was 460. Now we're talking 1,419. What that does is it has very big impact on the prices of all imported products because we produce very little in the country. It has very big impact on, for example, the price of refined products of petrol that we use to power everything in this country. And how did we get here? I think when you take a step back, you will see that there are some activities that the central bank has been taking lately. A very important one is around the some of the circulars that were published just a few days ago, trying to limit the open position of banks, trying to woo IMTOs. For me personally, I also believe as citizens, we also need to contribute our own quota by ensuring that if you don't need dollars for genuine international transactions, we need to at least to some extent scale back on the bet we are taking against the naira as citizens. Because all of this, when we do it, it helps in the long run to reduce the pressure that the naira faces, because the need for dollars should genuinely be for those that have legitimate reasons for international transactions. And that bit is what I meant when I said as Nigerians we need to do our own bit. Because when we cut back on that, the pressure on naira reduces. The naira is able to find the right level in terms of pricing, and ultimately we are able to bring, because we import a lot of inflation into this country, and we've imported a lot in 2023 since this devaluation happened. Structurally, if we cut down on all of this, I believe as a country, the inflation generally can be managed when you add that to the monetary policy tools which the CBN has been deploying, and we also believe from the MPC of February 2026, we will have more clarity around how that will unfold.
If the citizens have to take advantage of, if they don't need dollars, that means they have to go for locally produced goods. The question is, do we have those alternatives? Do you understand? If you tell me not to patronize imported goods, there should be a locally produced alternative.
Yes, I think it's not possible to say we shouldn't patronize imported goods. I think we have to do, if we don't have local alternatives, yes, we need to import in the short term. But the real point is not trade related FX demand. The issue is the FX demand that just you get money and all you do is to deposit the cash in the bank. And in economics, that's even a fundamental problem, because you distort the process, the flow that you should have in the money multiplier chain. And as you know, in the country, about 60% of Nigerians work in the informal sector. And what that means is the channel through which money flows into the economy. It has to go through those that are in the formal sector mostly, and then it cascades down from there. If all of us that earn salaries, all we do is to convert that salary to dollars and we keep it in the bank, that distortion is significant, because there are so many people in the informal sector that depends on our spending power. And if that spending power is not flowing the way it should be, the cash that we are putting in the bank is not adding value to the overall economy, which is why in Nigeria today, you can go back and say that, the money supply in Nigeria, for example, between 2022 and now grew by almost 26 trillion. Yet the GDP only grew marginally by 2.5%. And what that means is that the growth in money supply is not really translating to economic activities. And that is a distortion that the central bank alone can't fix. It's a distortion that needs to be fixed by ensuring that the growth, as the structure of our economy should be such that the growth that we have is translating into productive activities that ultimately result in a much higher GDP for the country.
Mr. Amida, how much of 2023 economic remnants have found its way into 2024 that are issues that will shape the economy in this year report? I hope you understand my question.
Yeah. So I think the first one, I think FX still remains a major problem. Because in 2023, I think we closed around 8,900. Now we're at 1,400. And to a large extent, in 2023, the government said that there is no subsidy, for example. And the pricing of petroleum product that we have now, I think the closest you have to it was when the Naira was devalued and we were at about 700 and 750, 800. Now at 1,400, who pays for the differential? And it is very likely there can be pressure. If government doesn't want to pay the subsidy, then there can be an increase in prices of petroleum products. And what that means ultimately is additional inflation. because the goods that are produced locally, for example, if you look at the farming output from the north, they need to be transported down to commercial centers across the country. You spoke about the price of flour and other inputs used in the production of bread. All of that may even may increase further if the increase in FX as we have it now remains. Inflation is another point, which is you can link into FX, but generally is something that we've had to deal with for a bit. And the outlook generally, I think I think according to the IMF report, is that it should stabilize. It should be around 23% this year and maybe 15% in 2025. The actions of the central bank has made it clear that part of their objective is to target inflation and achieve price stability in the long run. So hopefully, from the MPC that is scheduled for later this month, we'll start seeing if the actions and decisions that will be taken will be aligned with this inflation targeting posture that they've communicated. I think the other bit will be generally around productivity. The unemployment rate still remains very high. It was high in 2023. It's still very high in 2024. And we believe we need to see the reforms that the government plans to implement start taking shape before we can conclusively see what the direction will be for unemployment, because youth unemployment in a country like this is quite tough. But there are positives that as a nation we can take advantage of. And when you look at it, Naira has been devalued. We have very highly educated youth, maybe population, and as a country, our job is now to translate some of the benefits of this devaluation into export earnings. We published a report as PwC a few years ago where we spoke about how Nigeria can export the brain capacity of our citizens. And this situation that we find ourselves in provides a very strong opportunity for us to be able to take advantage of those types of things to help reduce the pressure that we have on the country.
Okay, let's take a look at the 7 key trends that in your report says will shape this economy this year. Let's take a look at number 1, which you talked about, executing fiscal reforms, balancing ambition with budgetary implementation. When I saw that, balancing ambition, it's good to be ambitious. It's good to have revenue targets. What do you think will be influencing Nigeria's revenue targets for 2024 vis-a-vis the historical perspective? You know, because we've always predicted, we've always had ambition, we've always said we'll make so amount of money, but history has shown us, at least in the last few years, that we do not get there. So when I saw your balancing ambition, I'm not part of you people that created the report, but I assumed that could also be it, you know, balancing ambition with realities. So what key factors will influence Nigeria's revenue targets for 2024? And historical performance. So balance that for me now. And to
So I think historically, like you've rightly said, we've underperformed mostly. A very key component of our revenue as a nation is our oil production. And when you look at it in 2023, for example, the budget, I think it was about 1.69 million barrels daily production. We ended up at about 1.2.
even
And
dropped to
the
about
gap,
900,000 in December of
yes, at
last
some
year.
point
Yes,
during the year, we
yes.
were that low.
September
So what
to,
that
yeah,
means
yeah.
is that's part of the reason why there is no FX, because the liquidity that would have unlocked if we had done that one, produced that 1.69, is way more than what we ended up with. So the government needs to, and the budget for this year, I think the deficits that we have between the expenditure and the expected income is about 9 trillion naira. And that's, you can link to the aggressive posture of government in trying to unlock revenue as much as possible. So for us, it is the message in here is the need for government to be able to implement reforms that can help unlock revenue, unlock productivity, deliver on the targets that underpins the budget. This year now, we can't afford that level of disparity between the expected target production and the actual. Beyond all of that, there's a need to have some sort of tax reform. The tax reform, we shouldn't tax those that are already in the tax bracket too much. We should try to, at least the government should bring initiatives that can bring more people into the tax net and increase the revenue potential of the country. But generally, the gap that we have now, the other point to note is the pressure that the debt service obligations that we have is putting on our overall financing. This year, for example, about 8 point something trillion is budgeted for debt service obligations. And to the extent that that overhang remains, it becomes the headroom that the government that they will have to do other things may be impacted. So the essence of that particular trend is the first one and the very important one. That the government needs to ensure that at least they have a well laid out strategy to be able to deliver on the ambitious targets that has been set for themselves in the 2024 budget.
Let's take a look at the second trend, which if we have that, we can put it on air, guys. Do we have those trends, the graphics, so that we can follow up, our viewers can follow up with it? For the second one, evolving monetary policy stance, finding the right framework and instruments to achieve price stability. That was also particularly interesting for me, finding the right framework. That means that perhaps the frameworks we've been using before in monetary policy have not really worked. And the governor of the Central Bank of Nigeria has mentioned that several times in terms of even the transmission mechanism. In December, just before we went home for the holidays, I spoke with the central bank governor, and he talking about inflation as well as FX. And he did tell me at that time, just about 2 months ago, that Nancy, the transmission mechanism of the monetary policy framework, the way it was not working. So finding the right framework here, what is PwC suggesting? Because we have the next MPC meeting will be held February 26th. So what do you mean by right policy framework?
Yeah, I think I think the central bank governor mentioned he touched on this yesterday, and the which I think according to him, he said the reason they are just scheduling the MPC now is that he wants to ensure that the foundation they get everything right, such that when they start implementing their own policies and trying to use the tools that are at their disposal, the impact will be well transmitted within the economy. And for us, as we mentioned in the report, to achieve price stability in the long run, the central bank inflation needs to be brought under control, and FX needs to be controlled. The tools that are available to us, I think I've mentioned some of them on the call now. The CBN came up with quite a bit regarding the circulars that they introduced recently. But generally, for us as PwC, we believe as a tool, the central bank needs to ensure that we are able, the key ingredients that are the factors causing this high inflationary environment, we are able to deal with them. The inflation is cost push. The cost element has to do with the contribution, for example, of refined product in the total FX demand of the country. Hopefully, the introduction of Dangote refinery will help us solve that. The differential that we have between the parallel market and the official market, the convergence has taken place now. Hopefully, that will bring in more flows. The CBN governor mentioned yesterday that he's seeing a lot of interest from FPI for portfolio investors. Such flows, when they come into the economy, hopefully they help improve liquidity And overall, the level of productivity, for example, the CBN has done quite a bit of OMO up activities in the last few months, and that's really hasn't really reduced the expected level of inflation. Inflation still went higher to about, I think it was still about 28.2%. But in the long run, we feel all of these tools that are available to the central bank, if implemented properly, they will help us achieve the long-term stability that we require as a country.
Now, how can the officials achieve coherence and alignment between fiscal and monetary policy that will also help stabilize prices? How do you expect the government to do this? Because it's really what we are in Nigeria now is more than even a policy trilemma. Is there anything like a policy quadrilemma or even more, okay, multilemma? We have multilemma challenges. you know, lack of production, FX rate going high, inflation, unemployment, poverty, all the macro numbers aren't looking good.
Yeah,
So how does the policy, the fiscal and the monetary policy, how do they attain coherence without jeopardizing the fiscal authorities' targets? I hope you understand what I mean, because the fiscal
sure.
authority also have their own ambitions to make money, get revenues and all of that, while also managing debts. So how do you achieve an alignment in many misalignments where your debt levels are projected now to get to 107 trillion naira from where we are now of about 87 trillion naira or so. So it's actually is multi-lemma. If there's any English like that, if it's none, I've formulated my own this morning.
So I think the very important thing is for both of them to speak to each other. And there is no point in CBN having its own activities, the fiscal side of things, doing their own stuff. And to the central bank governor's credit yesterday, he mentioned that they now have regular meetings where they compare notes. They are in touch regularly to ensure that the activities of the central bank is aligned with the direction that the fiscal authorities are what they're doing. So, but that is fundamental. It is until we are. I don't think we did that very well in the past, and if we are able to improve going forward, it will be a very at least very good message to the investors and other stakeholders internationally. And also the aspect, what other thing that we also need to take from the reforms that has taken place in the central bank is that the monetary authorities needs to be restricted to their core mandate. And I think the central bank governor, since coming on board, is try to correct that by limiting the level of intervention that I think that the CBN introduced, or that they continued with. So all of that kind of posture helps send the right message, because the central bank should focus on its core mandates, the fiscal authorities should focus on their core mandates, and they have at regular meetings they compare notes to ensure that at least the plans that each of them have, they are well synchronized, and that the outcomes are well tracked, and hopefully we start seeing them materialize from 2024 onwards.
Do you think that I'm dwelling so much on the monetary side and the fiscal side? Of course, we know that for any economy, they're like is a tripod: monetary, fiscal, and perhaps trade. If you add any other tripod, any other thing can stand. Um, the transition we're seeing right now, according to the central bank governor, because he also mentioned that, the transition to inflation targeting, how will this work? Given in mind the kind of pressure that we're seeing right now on inflation, of course, 28.9% is also been predicted to go higher than that. The cost of living crisis has been exacerbated because of prices, higher prices. So, will they really get, will they really get that? Will they achieve that inflation targeting now?
So I think the inflation targeting is not, the very important thing is to, which is what the central bank has done, and he mentioned yesterday that they are going to improve on their communication, is to be very transparent. When you are transparent and you let people know that this is what your long-term objective is. If your long-term objective is to have achieved X level of inflation, and that is well communicated to the market, the next thing for the monetary authorities to now do is to ensure that the actions that they are taking, the policies they are introducing, they are geared towards taking us to that target. So we cannot say, for example, that we want to achieve a long-term inflation of maybe single digits of inflation. And then every policies that we introduce, they are taking us in another direction. Then investors will lose confidence in the bank or the monetary authorities generally. So as a whole, it is not, when we have the target, it is not so much that the target must be achieved in 2024, but the objective is to ensure that at least we have policies, initiatives, and that the market perceives to be taking us in the direction of the targets that we've set for ourselves. And we are very transparent in how those policies are communicated, and all the activities of the central bank, how they are being coordinated to ensure that at least everything aligns towards what has been determined to be the long-term target of the bank.
Now let's talk about your third one, and I hope we can run this through. Your third, talking about investors being cautiously optimistic. What are the factors that would influence that cautious optimism for Nigeria, and how do you think that ratings agencies, perhaps if we see downgrades, though I know that a few other ratings agencies have, taken us from negative to stable, but how do you see ratings from Fitch, Moody's, and Co. are influencing Nigeria's investment climate?
Yeah. So generally, I believe the ratings are outcomes of the reforms and the initiatives that we implement as a country. If we continue to do the right things, it is natural for the ratings to improve. That's just the way it works. So our job is to do what's within our control, and the markets, hopefully we perceive them to be positive, and we will be rewarded with positive ratings, investor interest in our shares, bonds, and all the other instruments that can bring FPIs into the country. But generally, around investors being very cautious. For example, we've spoken about inflation targeting. This is new.
Yeah.
This current leadership of the central bank, the investors need to see the central bank earn the respect that they are genuinely targeting inflation as they have communicated. You have different levels of the level of volatility in our exchange rates remains very high. I was speaking to an investor who concluded a transaction very late in 2023, and he was complaining to me that they just finished the transaction in 2023 and they've lost 30% of value already, just within months, because the naira was devalued further from the level it was at the time they made the investment. So those types of activities will still make it very difficult for some investors to take a very that decision to come into the market. But like the central bank governor said, there are lots of interest on the portfolio side of things. The foreign portfolio investors are really interested, and to support that claim, the Nigerian capital market has also been performing very well. So a lot of them may just want to get very quickly on the bandwagon, so at least they can cash in on the positive outlook that is being
Okay.
projected by the
Okay, Kunle,
Nigerian capital.
let me just drop this in. From your report, what sectors are expected to drive FDI into the country this year?
FDIs are still is a bit, FDI is very tough, but I
And
think
very
within
uneven. We've seen FDI,
yes,
yes,
yes. Yeah, so we believe manufacturing hopefully should do well. Oil and gas activities hasn't gotten to the level that it was in the past, but hopefully there are some transactions in the pipeline. If they are completed, then there can be an acceleration in that space. But financial services, there are activities there as well. All of that, agriculture is another area where that requires a lot of attention. There are investor interest in different segments of agriculture because I think you mentioned earlier around the prioritizing local alternatives. So because of the level of devaluation that we've experienced, there are so many investors looking to start activities that can result in us being able to produce those local alternatives for different products that we use as Nigerians. So those are low-hanging fruits that we are already seeing interest in those in each of these areas, and we believe that if the reforms are right, the investors are calm, and the outlook for exchange rate becomes a bit more stable, we should see traction in all these areas very, very quickly because the Nigerian securities are actually very, very cheap now when you compare them to what obtains internationally.
Okay, let's use the last 3 minutes to go through some other key trends. And let's talk about unlocking productivity. How should we unlock our productivity this year? And one other thing I would like us to take a look at is one area that will shape the economy this year, which you talked about. Consumers may likely adjust better to evolving policy and macro realities. I'm trying to adjust, so uh, so I'd like you to talk about that. And I think lastly should be external factors. So with that, I think we may have covered the 7 trends.
Yeah, so to unlock productivity, I think for us as a nation, there are different things that are impacting us. The first, we have issues with insecurity, for example. That has to be dealt with because it is quite difficult. Agriculture is a major aspect of our economy. It employs quite a lot of people, and issues relating to insecurity have prevented farmers from going to farm, and the outputs that we have, even our food security, is being threatened as a result of this. Infrastructure is also another major point that we need to address. We have that there are so many four aspects of that requires huge investments in. We have transportation, power, different trade carrying infrastructure that needs to be in place for us to be able to succeed as a nation. We either lack or maybe they are not in good shape. So each and every one of those needs to be prioritized. And the other point you made around
Consumers.
Nigerians adjusting, I think adjustment is required because the disposable income of almost every one of us has been significantly impacted. And with lower disposable income, I think there's some level of prioritization that we believe will now start taking place, given what we experienced in 2023. So that prioritization will help to some extent reduce or maybe improve how prepared we are as citizens for what can happen in 2024. But generally, the outlook for our purchasing power is linked to the central bank's ability to control inflation and also bring the volatility of FX under control.
Okay. External shocks, a few seconds.
The external shocks, I think the biggest one is around the oil prices,
Okay.
because we are still very dependent on the oil as a major foreign exchange earnings, and as a country, we really need to ensure that at least hopefully there is no major shock that takes us to similar to what we experienced in 2020 when oil was sold for, was it 20 dollars or 10
$20.
dollars?
Yeah.
Yes, yes, yes. So that's a major shock that we need to deal with. Also, oil theft is an issue that we need to also ensure that at least we are
Okay.
able to address. If we address this and we meet these major components of our revenue projection in the budget, hopefully we will have very little challenges dealing with the deficits and the revenue guidance that we have from the government in the budget.
Mr. Amida, 10 seconds. Let me ask this question. This is your report. Give us one word that summarizes this report. I asked Dr. Tayo Aduloju, the NESG CEO, the same question when I interviewed him last week on their report. Give me one word that encapsulate this report? One, not
I
sentence,
think
one
it's
word.
insightful.
Okay, insightful. He told me
Yeah.
intentionality. Why are you guys? Insightful, intentionality. Thank you very much, Mr. Amida,
Operates
for joining me
obviously in a
today.
political
Let's talk
economy of
again
oil
soon.
and